Good morning and welcome back. It's Thursday, September 21st, just before 6 a.m. Central Time. Overnight, the precious metals are getting smoked after yesterday's hawkish pause. Gold down $22 at 19.45. Silver down 32 cents, 23.52. Copper down 9 cents at 3.68. That's approaching the contract lows from August 14th. Platinum's down 20 bucks at 9.22. So never trust the Fed. I mean, the Federal Reserve, you got to remember, these are unelected officials. And even don't trust the elected officials. But Jerome Powell, he's just looking at the numbers here. He indicated that another future interest rate hike is projected by the year end. It is on the table. And I indicated on a lot of these different videos leading up, 99% chance they're not going to raise heights. But I was a little bit cautious here because of the fact I felt he was going to say something, which he did. So they are projecting about a 50% chance or a 50-50% chance that they either raise rates in that October, that November meeting, December, something along there. Be sure to check out the CME's Fed Watch tool. You'll be able to look at those indications going out. Now, he did say that monetary policy is expected to be significantly tighter throughout 2024. So on the previous videos, I told you that the first rate cut was projected for May 1st, or that May meeting. It's now pushed out to September. So you're going to slide the curve out. So that's why everything's coming down. You got gold coming down. You got silver tracking it. You got treasury yields cycling up. You got the dollar going up. You got a lot of pressure across the board right now. So Fed Chairman Powell, he indicated that the growth in the GDP, which we've talked about here, continues to accelerate higher, beat expectations, that the consumer spending has been quite robust, and that housing activity, that I'm a little skeptical on, is picking up. I really think that the higher interest rates are going to weigh in, but the builders are coming out. They're trying to make up for some of that lost inventory that's just not turning over. You're getting people buying second houses, but they can't sell their first house because their interest rate is too low right now. So he said that he's got to get the inflation down to 2%, and it's got a long way to go. So, how the Federal Reserve works is, imagine you're driving at 90 miles an hour, the freeway is wide open, and you're just using the rear view mirror to dictate how you're driving. It looks great. There's nobody around. You're just cruising, but what you don't see is the traffic jam coming up there. So what they're going to do is they're going to crash into the traffic jam, they're going to crash the market, and then they're going to go, oh crap. Yeah, they're going to look in the rear view mirror and see the debris of the vehicles they just crashed into all over it. So that's how the Federal Reserve works. They don't look ahead. They don't use forward projections and go, hey, this doesn't look so rosy in the forward. Maybe we should throttle down. They just don't do that. So you look at oil at 90 bucks. It was $93 2 days ago. Now it's at 87. So I do have to give them some credit that energy and food prices are quite volatile. We could see crude oil prices continue to pull back from here. A lot of it dictates on what OPEC does and things like that. So getting back into it, that was a little bit of a tantrum. You got gold here. It's still bearish trend. The support compresses as it comes down because we've had such a violent move up. It's between 1945 and 1924. There's not, with this much volatility, there's not going to be like this pinpoint accuracy like what a lot of times we see with our probable ranges here because of taking algorithmic views on the last few days activity to gauge where those are at. So I wouldn't be surprised if we don't overshoot. We get maybe into those 1930s, 1920s. We'll see how it opens at the 8:30 open. The trend reversal point, 1969, we were so close, so close. If you front run the trend reversal point, it's best to use call options or call spreads in order to do that, to minimize if it is a failure point right there. The 200-day moving average, 1981, that's like a light year away right now. So remember, it all moves, the gold market moves right now on the dollar index and treasury yields. Now you look at the silver market, it's still a bearish trend. Even though it's looked great, it's holding a little better than what I thought. Right now, we were down about 50 cents. We're down about 33 cents right now, trading right around 23.50. Now, the trend reversal point, 24.37. So it's got a long way to go on the upside there. 200-day moving average 24.16. So silver's got a lot more work to do to the upside. The outside markets are all weaker across the board. U.S. equities are under some pressure here right now. They're readjusting their curves and their scenarios of when the Fed will ultimately cut rates, but it doesn't look like it's till the back half of 2024 now. So you got the dollar index up 36, 105.17, up 36 right now. Wow. U.S. All your foreign currencies under a lot of pressure. British pound, they are going to have an interest rate decision. It'll be shortly after this video is released. They have raised rates 14 straight rate hikes. So that's going to be something to look at right there. There's going to be a lot of volatility. Again, we do have initial claims coming out. You do have crude oil down 83 cents, 87.50, and treasury yields up 8 basis points at 442. So, I got to give the edge here to the bear market today in these markets. So you got any questions? We're going to start posting these on Apple Podcasts and also on Spotify. So if you don't have time on YouTube, you can follow Blue Line Futures on there. I'll be posted as the Metals Minute. You got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.